Good afternoon, everybody. This is Chris Robinson, Robinson Ag Marketing with today's post goes grain and livestock comments for Tuesday, January 20th. Moving right along here. The day after the long weekend, no follow through buying into grains. Start off with corn, a 3 cent range again. There's nothing going on in corn. I mean, we're just kind of trying to wait and see what the next shoe is going to drop after we were digesting that USDA report. We're under all the key moving averages. We are at risk of, um, you know, if we take out 420, I think that opens up the door to the contract low down there at 410, which was back in August. The recent low was 17 and a quarter. We did see with the commitment to traders that the funds are just now really getting short corn with a decent position, nothing huge. But certainly, this whole sell-off can't be blamed on those guys. I wish we could, right? And then the beans, they were long beans going into the report. They were short about 15,000 corn. They were long about 60,000 beans. They're now flipping. They're probably flat or maybe short 10,000 contracts of beans. So again, they are just reacting to the USDA the same way we are. In the wheat, they did go into that report already short 100,000, 110,000 or so. Probably going to add to that as well. And the thing I'd be worried about with Chicago wheat is if $5 fails. We've talked about that for time and time again. That's a big psychological number. We did trade down to 501 and a half back at the beginning of the year. We're sitting here at 510. I gotta imagine if that continues to grind lower, you'd want to have some sort of protection on. If you're not getting my letter, please sign up for it, robinsonagmarketing.com. If you want a couple freebies, call me 312-638-8868. I'll send them to you. You can see what's involved, what I do. I go through every day and put in key support and resistance areas. I don't write it with a bias. At least I don't think I try to write it with a bias. I spent 22 years trading my own account, so I know what happens when you get married to a position. I don't try to do that. I don't try and live out my, um, you know, need to be right or wrong. What I try to do is manage risk for all my clients. Some of my clients are bulls, some of my clients are bears. Just when it comes down to it, my job is to help them do the best job managing the position. And I think that's the value that I bring to my program. So if you're looking for help with your marketing, if you're looking for a change, a lot of guys are. I'm not saying that I've reinvented the wheel or anything else. I think a big part of working with a broker is you want someone that you like, that you trust, that when they call you, they'll pick up the phone. And I'll be honest with you, I've had some guys that, it seems like it's going to work out well, and we just don't work out well together. It's like being on a team. You've got to have good communication with your broker. There's got to be good understanding and trust between a broker and a client. If you don't have that, it's like any other relationship. It doesn't work out too well. So I'll just open the door there. Again, robinsonagmarketing.com. You can give me a call, 312-638-8868. I'm on all the socials. Obviously, if you're reading this, you probably or listening to this, you've probably already seen it. I would ask you to go ahead and sign up for the letter, or at least email me and I'll send you a few copies. You can see what's involved. You can go month to month. You can do the whole year. Month to month, it's pretty standard, $50 a month. If you do the whole year, you save 25%. You save $150 if you do that now. And I realize a lot of inputs are there and that other thing, but if you break it down, when you look at what a lot of other services charge, I'm right in line, if not on the lower end of the scale. And then I say about it is if you don't like the approach, you delete it, block it, you never hear from me again. So there you go. March corn, again, I'm worried if we take out 417, it opens up the door 410. Being worried is not me predicting we're going to go there. I would just absolutely positively tell anybody that out there that is long corn, you need some sort of a floor in case we fall lower. Um, Same thing with beans. The story came out today. China's, they've honored their 12 million metric tons. So great. The last little bit's going to ship out, but that grain's been bought. And, to be sitting here, at the bottom of today's trading range, we had about an 8 cent trading range and we finished down at 1053. We need to get above 1070 to feed the bulls, right? This market's been trending lower really since November 18th. We kind of peaked out there on the kind of the China fury. That rally from the end of September at 10:34 to the middle of November, right before Thanksgiving, 11.72, that $1.57. That was just a tremendous gift. And we tried to take advantage of it. I'll just leave it at that. And that mean, well, we wanted to try either make cash sales or set hedges. Not because we knew it was going to break $1. I always get this conversation with guys. I mean, I'm not, I don't have a crystal ball, but I can help you manage your risk better if you're interested. If you're not interested, that's okay too. Some guys like rolling the dice. But the nice thing about it now with these shorter dated options is you don't have to spend a fortune. 15 years ago when I started working with brokers in 2000 with farmers, when I started being a broker. Prior to that, I just traded my own account for 22 years of the floor. When I started being a broker, I understood that it's hard to ask somebody to cough up a bunch of money for protection that they hope they don't need. And 15 years ago, we would go out and they didn't have shorter dated options. They didn't have weekly options. They didn't have options you could do for 2 or 3 months. You had to go out and buy a bunch of time. It was very expensive. Spend 30, 40 cents on corn puts, 50, 60 cents on bean puts. And now you can get hedged for less than a dime, certainly less than 15 cents, and still have really, really good protection on. So gone is the argument that it's just too expensive. Okay, you might need somebody to help you manage these shorter dated options. Is it some skill that you can't learn yourself? No. But most people, if you're running the farm and raising a family and doing everything else, do you really want to spend an hour a day or looking at charts or manage your positions? No. So that's the service I provide. It's a fit for some people. For some people, it's not. So if you're looking for help, give me a call, 312-638-8868. Again, kind of a disappointing day in the grains here. The couple things in the news, obviously the issue about now we're going to have European tariffs because of the Greenland situation. Market didn't like that. The outside markets, you've got silver and gold making new highs. The S&P and the Dow both moved lower today, but I just wanted to say something real quick about the S&P and the Dow. When the S&P is at 7,000, we were always taught, and I've been in the business for 30 years, that 5% move or less is noise. A 10% is a healthy correction. So when we're at 7,000, we're going to have 700-point moves. If we have a 20% correction, it's going to be 1,400 points. And just get ready for that because it's going to come. Markets don't go straight up. If you look at the Dow Jones, same thing. We're darn near 50,000. A 5% move is 2,500 points. 10% moves 5,000. If when we have a 20% correction, it's going to be what's 20% of 50,000? 10,000 points. So the media is going to have a field day with it because most of them don't understand third grade math, much less fifth grade math, which is probably where percentages come into play. So be ready for it. It's going to come. I don't know if it's going to come tomorrow or 20 years from now. When it comes, you're going to see some really ridiculous stuff in the media when it happens because these guys are fascinated with one thing: big numbers, right? When we were kids and the Dow was at 5,000, when it dropped 1,000 points, that was pretty horrendous, right? 35% in one day. But when you're at 50,000, a couple thousand points really doesn't matter. I hate to tell you, I know it, sounds scary, but it all comes down to percentages. So get ready for that. That's my caveat for that. I did spend 6 or 7 years, maybe 8 years, trading the Dow against the S&P when the Chicago Board of Trade had the Dow contract. I traded everything else, but I'd go trade beans, but then I'd walk into that Dow pit. And so I've got a little experience trading that market. I'd say 7 years of standing in there. Earned me a little bit, certainly earned me a lot of gray hairs. Okay, moving on. Other things in the outside markets. We're watching crude oil. It's still under 60 bucks. We had, we tested that $55 level. I don't think anything really gets interesting until we get up towards 70. Not saying that we can't go there, but at the end of the day, it's really a supply issue. And silver, it's trading right around 95. Everybody's can't wait to see if we get the $100 print. That's going to be the next big target because human beings like round numbers. $100 silver, $5,000 um, gold, and we'll see what happens. Once we get there, I have no idea. It's like the guys, for 2 years, cattle rallied, 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 and all guys did was try and call the top. That was pretty expensive. So if you have that type of risk, I would definitely try and look for some sort of protection if you're concerned about big correction. I'm going to wrap it up with the cattle. Cattle finished the day up 50 cents, and fat cattle up 234.50 in April. March feeder cattle finished the day up a buck 20, but still didn't take out 360. I think that's going to be the battle line there for 360. If you look at that move, we had a tremendous move. We made a new 10-month high on Friday in all these markets, in the fat cattle and the feeder cattle. Excuse me, a 10-week. Really, I just call it a 3-month high. 3-month high, $77 rally off the bottom, a 30 plus rally off the bottom in the fat cattle. Just a tremendous gain in revenue, and certainly something that you want to look at, possibly protecting with a hedge. I broke it down in my weekly report, and if you get a chance, if you want to take a look at it, just give me a call. I'll send you a copy of it. In the lean hogs, same thing. We've had a tremendous rally to new 3-month highs. We have contract highs on Friday in April. A little bit of a pullback here today. I'd say the number one thing I'd be worried about if I was long cattle with no protection would be actually 2 or 3 things. The first one obviously would be if they open up the border of Mexico. The second would be if they really did get screwworm here in the northern hemisphere, right? If it did jump from South America to here. And the last one will be, if we do have a big correction for whatever reason in the stock market, generally, if it really gets going, and I'm not talking about a day like we had today, I'm talking about if we get 5%, 6%, 8% move in the stock market, that generally they hammer cattle. Okay, so that would be my risk if I was long cattle. Nice thing is there's a lot of meat on the bone there to protect. So, all right. Well, thanks for listening to me. This is Chris Robinson. Like I said, if you need help, if you're looking for advice, if you've got a problem and you're worried about, how can I hedge this, or I want to sell this, what happens if I sell it and I want to re-own it? All those conversations we can talk about. So have a good rest of the Tuesday night, and we'll be back at it tomorrow morning. Have a good night. Take care.